Hi, everybody. Welcome back to another edition of BCTV. We are back to talk about one of our favorite subjects, that is the blockchain industry. And we're going to dive into some of the most key areas that are being talked about within blockchain. So stay tuned for just a moment. But before we jump in, big thank you to tuning in today. Make sure you say hi, drop in any questions that you may have, as the comment box is open. I'm watching it as we go, so I'll do my best to ask your questions in real time. If not, you can find me and my co-host today available online 24/7, 365, and we're happy to follow up with you. Also, if you'd like to be on a show or you'd like to learn more about what's happening in the world of venture capital, make sure to check out VCTV and the entire archive by first clicking subscribe and second going to LATOKEN.com as well. And a big thank you to the LATOKEN team and to Maria for making today's episode possible. I'm your host, Kyle Ellicott. Let's go ahead and introduce today's co-host. Adrian, welcome to the show. A little background and intro for everybody.
Hello, Kyle. Hello, everybody. Thank you very much for having me here today. I'm Adrian Niculescu, serial entrepreneur and investor. My genius zones are marketing, sales, and business development, and I love to keep my hands dirty in these areas. Besides my advisory roles and board membership slots, I'm involved in a few projects. CloudCoin Consortium. CloudCoin is a post-blockchain digital currency. Faster Capital, a Dubai-based accelerator and incubator for startups. Sarah Global Ventures, which is a UK-based VC firm. And also I'm a mentor in Virgin Startups program in UK. Happy to be here.
Wonderful. Happy to have you as today's co-host. And our second co-host, ladies and gentlemen, welcome back, Matthew, as well. A little intro, a little background for everybody.
Thanks a lot, Kyle. So I'm Matthew Lemerle, based in Silicon Valley, 35 years here. Long-time internet and fintech investor. With Alison Davis, my partner. We got involved in blockchain back in about 2013. We're very active investors. Blockchain Co-Investors is the leading blockchain venture fund of funds and co-investment program. And we're investors in about 25 blockchain VCs, and through them, about 350 blockchain companies and projects, including a lot of the household names, Coinbase, Kraken, Ripple. A lot of the firms that you know in blockchain are companies that we were very lucky to have backed early on. And that's probably enough right now. Thanks, Kyle.
Wonderful. Thank you both so much. We know that this is, our favorite subject here at VCTV. For the three of us, this is probably one of the most exciting things we get to talk about every day, blockchain. And more importantly, when it comes to decentralized finance, we've got some great news, but also big headways. We've got news from Citibank. NYDIG just raised another 100 on top of a $200 million raise last week. So for $300 million over 30 days. On the banking side, again, Citigroup has just completed a proof of concept POC blockchain-based cross-border payments system in collaboration with the Inter-American Development Bank, so IADB. State Street, the second oldest bank in the US with about $3 trillion in asset under management, has just signed up to start doing digital currency trading mid this year here in 2021. But even with all that news, one of the more exciting and more big areas talked about right now is still non-fungible tokens, NFTs, and in a lot of different ways. So the minister of the UAE has come out and said that they want to tokenize everything. They want to be known as the central location around the world for everything tokenized. Tokenization, which NFTs play into. We also look at DraftKings, who mentioned that they are going to be doing an NFT contest around the Masters golf tournament this week. We also have many other companies getting into the space. McDonald's launched an NFT series starting today. Playboy partnered with Nifty Gateways of Gemini yesterday as well to release a series. Time Magazine came out, so more brands are starting to get in this. We also have Paris Hilton and many other influencers who have started entering in this space, and Paris did a really detailed explanation on what NFTs are, why they're important, and why you should be paying attention now as well. So again, if those haven't read it, recommend it. But we'd love to hear from both of you. What is all this? What is this craze? Why is this so important here in 2021? And I'll just add on to the audience, in 2020, the entire transaction volume of the NFT market was about $250 million. Fast forward Q1, quarter one, first 3 months, January, February, March, we saw over $800 and growing million of transaction value in only a handful of projects and growing. This ecosystem there's something here, and it's much more beyond art and much more beyond moments. And so, Matthew, I'm going to turn it to you first. Kick us off. What is an NFT, if you want to go in that level? But more importantly, why is this so important now to be paying attention to?
Yes, thanks, Kyle. So, you know me, I normally start with the past and where we are today. And I think for many people, that makes it easier for them to understand where we're heading. So if we just start with that, we don't talk about non-fungible canvas or non-fungible Ferraris or non-fungible diamonds. We just talk about assets by their names. Classic cars, modern art, diamonds. We also just talk about stocks as Amazon shares. We don't call it non-fungible Amazon shares. But the truth is, the principles that we're now beginning to extend in a digital world are exactly the same principles we're used to. They are, if you've got an asset, and if that asset is scarce, and if more than two people want to own it, then they're willing to bid, and you can get the asset in front of them, then you're going to have a price. And that price can go up very fast if enough people want the good. And that essentially is how markets operate. So it doesn't matter if you go to the stock exchange or if you go to Sotheby's or Christie's, what's really happening is a scarce asset is being made available to people that value it and want it, and they're bidding with each other, and the price is getting established, and often the price is going up if it's scarce enough and if enough people want it. The problem is, in the past, it's really hard to operate this because we tend to focus on physical goods in physical marketplaces where we can't get that many people in the room. And so we get a lot of distortions. The costs are high, the time is long, we don't have good price discovery, and we end up with suboptimal results. And so, most of us don't think that modern art's very valuable, but a few people really do think it's valuable. Most of us don't think that baseball cards are valuable, but a few people love collecting them. And actually, most people in the world don't really want to own Amazon stock either, but they trust that Amazon only issues a prescribed number of digital share certificates, and those do get bought and traded in stock exchanges around the world. So now, remember everything we just said, and add in this, that most assets in the world are not digitized yet. They're physical. So most property, most homes are bought and sold on paper. Well, we don't call them non-fungible homes. We just call them homes. And you and I might want to buy the same home, and we bid it up, and one of us ends up buying it. Costs us about, several percentage points of transaction fees and 60 or 90 days to close because it's a paper-based process. So when we start talking about non-fungible tokens, what we're really talking about is turning assets into their digital equivalents, being sure about their authenticity, their scarcity, and their provenance, and then allowing them to be bought and sold on digital platforms where theoretically all 8 billion human beings can step up to the table simultaneously and say, I want that one, and price, therefore, is going to be more high quality and more reflective of the true demand for these scarce items. And that, in a nutshell, I think, is why NFTs are so important. Non-fungible tokens are simply digital representations of scarce items where you can be sure of their provenance, you can immutably see their scarcity, and you can choose to buy and sell them. And then the only thing that I think throws people for a real wild cards, and then I'll stop, Carl. The thing that really throws people for a loop is if it is a born native digital item. Because we sort of understand what a baseball card is. We have trouble imagining that there could be scarce digital baseball cards, but there are. There have been for decades. They're called digital Pokemon cards and digital Yu-Gi-Oh cards, and they do exist and they are scarce, and we know that to be true, but they are digital only. And that really does make old people who are used to physical goods, it really does make them get confused. In a nutshell, going back to the Amazon example, you know, the Amazon share certificate has been digital for a long time. We buy and sell it, and we don't have a problem with the notion that it's a born digital concept. We trust that Amazon only issues a certain number of them, but we don't know. We rely upon that trust. That trust is engendered through a regulatory process. It's not as clear and transparent and as substantiated as the blockchain would allow it to be. And that really is the story of NFTs. I know I took a long time, Carl, but I've been in quite a few conversations, and I hope that that was clarifying for at least some people.
I think it was great. I mean, I'm seeing shaking heads around for all of us that talk about this or invest in this industry, and I couldn't agree more. I think that was a perfect description. Thank you for that as well. And that digital representation of a scarce item, I mean, that is a true to its core what is possible. And for me, it gets exciting to see how that maybe plays into the enterprise as well, as we've talked about digital twins being, you know, a digital representation of something physical as well, and what that could look like. But Matthew, you're painting a great picture. Adrian, Keith, anything to add on, or any questions or thoughts as to where this market of NFTs is going as well? I mean, as Matthew said, these are digital representations, in some cases just completely digitally created as well. And now on Matthew's note, I'll just also add, I mean, Pokemon Go. Look at Pokemon Go and the explosion that happened when Niantic launched that a couple of years ago. I mean, this was all digital, everything digital. And these once physical Pokemon cards, just to remember, and then the Pokemon video game turned into a mobile game that people went everywhere to collect these moments, these digital creations, and hold on to them. This is just another evolution of that as well. Adrian, I see you're unmuted. Anything to add onto NFTs? And then Keith, I'll come to you next.
Am I muted? Can you hear me?
No, you're good.
I wanted to refer a little bit to the emotion side when we are talking about entertainment. When we like an artist, when we like a football player or a musician, we want to have a piece of that person. And in the real world, we want an autograph, we want to buy a t-shirt or something like that. And the NFTs in these niches, they are coming to fulfill this emotional need to be closer to the artists we love, or football players or golf players. And also in marketing, there is a technique, because some of the NFTs which are on sale right now, I believe, are pretty overpriced. But in marketing, there is a technique saying that the closer you want to get to somebody, the more you have to pay. You know, many trainers are doing that, and it works very well for people, and people are ready to pay more to be closer to somebody. And the NFTs also, they are fulfilling this space pretty well. And once an artist has a brand, the NFTs are extensions in the digital world of that brand. And that brand has a price, has a value, is a non-tangible asset. And the NFTs and the prices of the NFTs related to certain brands are digital representations of the value of that brand.
Yeah, it's an interesting perspective as well. I mean, as I mentioned, McDonald's, right, a brand coming out with NFTs and digital representations of their menus, their classic iconic menu items. I mean, and there's something Taco Bell did this as well. We saw many other companies, but Keith, I want to come to you. I saw you on mute, so anything to add?
Well, I just want to say, Matthew, your explanation there is the best that I've ever heard. So thank you very much for that. The McDonald's and the Taco Bell NFTs are things that I don't have a whole lot of expectation that these things are going to hold any value. I think they're gimmicks and of the moment. But as Matthew explained, let the market decide, right? This is these things are put out there as commodities, and we'll see what sort of demand there is. What I do like about NFTs is that they speak to provenance, and they speak to authenticity. If you look at the art world, the value that is paid for an original versus what's paid for a forgery or a print is orders of magnitude difference. And really, it's all about the authenticity and where it can be established, the provenance. And I think NFTs speak to that same driver that drives the value of artworks by the great masters. We're in the early days right now. I really like the lens through which Matthew framed everything, which is, this is, we're going to let the market decide on this. This is supply and demand, the supply of one, and we will see what the demand is, the democratization of opening this up to everybody. But the thing that I am concerned about here is, it is a democratization, yes. However, if everything is made to be unique, and you do have a very large discrepancy in terms of economic power that is out there, if these things are desired by everybody, they will not be available to everybody. They will be available only to the rich that have the resources to compete for them. If the whole world, if all 8 billion people can be bidding for these things, they will almost all go to the rich, right? So NFTs do have a role, but I think that they are at the they're at the rich end of the spectrum here, and people do talk about them in terms of democratization especially when you talk about art, right? There's a lot of talk about digital art right now in this world, and that's great, and it does establish a true value, but it is not something that will be accessible to all 8 billion people on the planet.
So Keith, I don't altogether agree, because I think that in the digital world, you have control knobs, and you get to choose how you dial up the control knob. One of the control knobs is scarcity. So in the old-fashioned world, Picasso painted some pictures. And if you have an original painted signed Picasso, that is very rare. Picasso then made prints of his pictures, and some of those he signed. If you have a print from Picasso that has his real signature, that is still very rare, but not as rare. Then what happened, believe it or not, was that Picasso and his estate made prints of the prints that he had signed. Those are, in some cases, still quite rare, but obviously less so. And then, since then, there are many people online that will sell you something that purports to be a original limited edition print of a Picasso print, but you know they're just rolling them off by the so now that example, there's at least 4 layers of scarcity around that particular Picasso image. And going back to your question, anyone in the world can go online right now to Amazon.com and they can buy very cheaply a Picasso print, but it is not one of the scarce ones. You see what I'm saying? So that little analogy demonstrates that scarcity, even in the old world, was a knob that was controlled by the creator, but most creators chose not to use that knob, right? So most artists paint a picture, they try and sell it. It actually sells for less than the cost of the frame because they can't find the buyer. You know, there's no efficient market that matches them to their buyers. And they end up selling their picture for $500 and the frame costs $600 when you try and get it framed. So in a digital world, we get to choose exactly where we fine tune the scarcity knob. So going back to your point, if I as a creator actually do want every fan in the world to have an NFT that I create, I just get to dial up the NFT scarcity knob to 1 million or 5 million or 100,000. It's my choice. But if I want there only to be one, I dial the scarcity knob down to 1, which is what Jack Dorsey just did with his original tweet. He said, I'm dialing it all the way back to 1. There will only be 1. And I think that that is a challenge for us. It's a challenge for us to imagine that scarcity is now a fully controllable knob. It doesn't even go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It actually can be any number you wish it to be. And we haven't yet got our heads around that because in the world of supply and demand for collectibles, we haven't yet begun to really manipulate the dial. The other thing that is very confusing to people right now is this notion of entertainment. Because we haven't really thought to ourselves that we get to dial the entertainment up and embed it into the item. So we used to sell the Picasso picture, but there was no Picasso entertainment in the picture other than the picture, right? But with software, we can get Picasso telling a story and we can embed the story into the same digital good as the image. And then we can ration the story. So it's sort of like only one person gets to hear the Picasso story that's embedded in this piece of software, or maybe 1 million people get to hear it. And that is also very challenging for people to get their heads around, the notion of scarce entertainment and scarce moments embedded into software and attached to collectible goods. I find that the analogy that helps most is if we start talking about lottery tickets. Because in the real world, people will buy a lottery ticket. They believe it to be scarce. They think there's a big payoff. They trust the government if government's issuing it. Well, just imagine that we're taking your lottery tickets, adding in some entertainment and digitizing them. That is essentially what NFTs can be, or at least it's one of the things they can be. So I went down all of that monologue, sorry, Keith, because I think that the democratization of access to scarcity is a set of choices, and NFTs enable actually great democratization and access if the creator wishes to. But if the creator wishes to go down the scarcity path, then I'm agreeing with your point that then only the rich people can play. But that is now in the control of the creator, which historically it wasn't. It wasn't. The creator didn't get to make those choices. The publisher or the studio and art gallery or other people made the choice. The creator didn't get to make the choice.
Thank you, Matthew. I really appreciate the clarity with which you express this. Your analogies are really great for driving home these points. Thank you.
Thank you, Keith. Thank you, Keith. I'm trying to understand it myself, to be honest.
Wonderful. We don't have any emoji on this broadcast, but I'll give you 2 thumbs up as well. So there you go. You're getting the thumbs up all around. Matthew, with that being said, being cautious of our time today, I want to make sure I get one more big question with you, and that's what is needed? Where are the areas of opportunity with NFTs for those looking to invest and or build in this industry over the next year? Because it is moving very rapidly. We see showcases. We're starting to see layer 1s, so blockchains, and then side chains, and then even layer 2s, scaling solutions coming towards this.
Yeah.
But what's next?
Yeah. So I've been thinking a lot about this. Having lived here in Silicon Valley for 35 years, I sort of, both passively and actively lived through the digitization of music, the digitization of video. And if I think about how those things played out, they began to be very confused. They started off very confusing. And when the dust settled, we ended up with a barbell. So one end of the barbell is high quality being a subjective measure, high quality IPs that are tightly owned and controlled and need to be managed in a highly disciplined way. And that you can think of as being Netflix, you can think of it as being Spotify. And then at the other end of the spectrum, we get user-owned, user-generated content that is brought to the market through digital means. And you can think of that as being, say, YouTube or SoundCloud. And there's not a lot in the middle. Right, the world there was a lot at the middle in the beginning, but it sort of split out. And Napster was killed because Napster tried to democratize copyrighted content without paying the price. And the world split into these 2 alternative ways of thinking about the world. I'm feeling like NFTs is going the same way. So right now, there's a lot of NFTs that are in the middle, where people are generating NFTs based upon other people's content. Maybe it's a picture of Batman or a picture of Star Wars, and they don't actually own the content rights. And it's all very messy. I think that will get sorted out, and I think the lawyers will jump on any NFT that makes a lot of money leveraging pirated content. And I think the world will, again, split into these 2 halves. So what's needed? So on the high quality, on the, if you will, Netflix, Spotify end of the spectrum, we need NFT platforms that are extremely good at helping creators and IP owners bring their work to their fans in efficient, rapid, scalable ways. And at the other extreme, we need very easy to use self-serve platforms that allow everyone to be a content creator and a content sharer. And there it will definitely be, the price is set by the making of the market, and most of that content will be worthless. But there will be pieces that emerge because, 10,000 of us all say that unknown artist who created the SoundCloud piece of music deserves a contract. Or, that video influencer is so great that 1 million of us watched the cat doing the cool tricks, right? Well, I think NFTs are going to be the same. So what's required is highly scalable, rapid, professional, quality content creation platforms for NFTs, as well as their distribution equivalents on one end. And on the other, I think there's a huge opportunity for anyone that wants to create the YouTube of NFTs. And I'm looking for that team as well. So, we're looking to back the YouTube of NFTs, which has to be designed to be fully self-service. And that's not going to be easy, but, how would any one of the 4 of us go to a platform, create some experience, have it digitized, attached to a blockchain and shipped out seamlessly into the NFT platforms and marketplaces? Whoever builds that is onto a huge thing.
I love it. I couldn't agree more. And quick shout out, where can everyone find you online to continue the conversation or share that exact idea with you to present?
Yes, well, if Adrian or Keith or Kyle have the idea, you know how to get to me. Everyone else has been on the screen the whole way through, blockchaincoinvestors.com.
Wonderful, Matthew. Thank you so much. Keith, I want to come to you for closing thoughts on today's topic around NFTs, also decentralized finance. I know you and Upper Stage Ventures have just made a few investments in the space, first time, congratulations. And also in the energy space, this is playing a big role. Excited to see how NFTs come into that world in the future. But any closing thoughts? And then of course, where can everyone find you online as well?
Well, I feel like I've been in the audience, but on camera here. And
I'm giving you a free shout out. I'm giving you a free shout out as an audience member.
That's fantastic. Thank you. Wow, what a platform. No, I mean, for me, I do, as I said in the private chat here, I feel enlightened. I think Matthew has really explained these things to me in a way that I did not understand them previously. So thank you very much for that. I find it interesting, the points around intellectual property. IP has an IP law have always had difficulty adapting to new technologies. There's always been a delay. Napster took advantage of that. Before that, you go back to the printing press, right? And the authors were those authors whose works were lucky enough to be printed were not necessarily consulted or got anything out of that. And we've seen that as new technologies have come along all the way here, and it's the same thing now with NFTs. I think the IP law, creates questions around what is ownership. To have a thing, do you have the right to resell the thing if it is unique? Are there rights associated with the original intellectual property owners whose designs were behind the thing that you own, which is unique? I'm going to be very interested to watch that continue to play out. As you can tell here from the questions that I've asked, I don't have a lot of experience with NFTs. My experience right now has been on the DeFi side of things. I had invited the CEO of one of our company's DeFi Ventures to come on here, and I hope that he'll have a chance to come on in future. I'm very excited about the opportunities in decentralized finance to solve real problems and address real demand for decentralized financial transactions, as well as for the monetization of assets. There's an ability to make real money in this space, and not just through arbitrage opportunities, but through the monetization of underutilized assets, which can actually be producing yield. And DeFi Ventures have software that addresses all of that and enables it. It's a little bit different than what we normally do. I'm more on the private equity side of things with Upper Stage. We are acquiring profitable companies up to about 25 million in sales, considerably earlier than most private equity firms work. And then we apply our network and our expertise to help those companies scale to address their large international market opportunity. You can follow me on LinkedIn or follow me on Twitter at Keith A. Gillard. I also run a club on Clubhouse called Canadian Venture Capital. And you can follow that. We do a show every Wednesday morning, 9 Pacific, noon Eastern time.
Well, check it out if you have.
I have checked it out. Apologies, I had a little audio issue there, but I have checked it out. It's absolutely wonderful. We're also on Clubhouse every Friday as well. So when you check out Keith 2 days later, put on your calendar to check us out on VCTV's Clubhouse as well. And last but not least, Adrian, quick shout out, closing thoughts, and where can everyone find you online? Thank you, Keith and Matthew as well.
I saw a statement from Marvel a few days ago saying that people should not buy any NFTs with characters from Marvel movies, because they didn't start this officially. So the intellectual property part is very important and will be a major struggle here, because anybody could create some Spider-Man NFTs. People would buy them, but at the end of the day, they will be worthless. this is what Marvel said anyway. I can be found on LinkedIn. I answer to all messages there. From time to time, I also come to Clubhouse at VCTV. And happy to be here and to come back to the VCTV family. Thank you very much.
Absolutely. Thank you, Adrian, Keith, Matthew. To our audience, thank you so much for tuning in as well. Make sure you reach out to all three of our co-hosts and guests today as well. I know they would all love to hear from you, especially if you're building the YouTube for NFTs. We would all definitely love to hear from you as well. With that being said, thank you again for tuning in. Make sure you click subscribe, like, and share the episode. Check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. I'm your host, Kyle Ellicott. A big thank you to the LATOKEN team, along with Maria, for making today's episode possible. We'll be back here tomorrow with more VCTV and tomorrow on Clubhouse as well. With that, everyone have a great day. We'll talk soon. Take care, everybody.
Bye. Thank you. Bye. Bye.
Bye, everybody.